Thank you all for tuning in and welcome to this live webinar about the Dutch Market in Minutes report that we launched earlier this month. In the coming 30 minutes, we're going to bring you up to speed about all the developments that we see on the Dutch real estate market. My name is Winjan Lam. Here I'm joined by Niek Poppelaars, Head of Logistics and Industrial, Bas Wilberts, Head of Residential and Hotel Investment, and Raymond Frederiks, Senior Consultant Market Intelligence. And for those of you who are wondering, where is Charlotte? She's not here with us today. Unfortunately, last minute she couldn't make it, so I'm taking her place today. Okay, let's kick off. So what are we going to talk about today? If we look back into time and look at the start of this year, it started off quite strong economic growth, recovery, but the global economy is reaching its limits right now. And I think it's something that we all notice. Inflation is very high nowadays, 12% last month. And the Dutch central bank thinks it's going to be about 8.7% for 2022. So that is very high. And if you look at that, then yes, it's probably it was very needed to have the interest rate hikes of this summer and also this September. And these developments, of course, will have an impact on the Dutch real estate sector. So given all that, what we're going to try to answer today is the following question. In view of the growing economic uncertainty and also in view of the conflict in Ukraine, which is unfortunately still going on, what is the impact that we expect to see on the Dutch real estate market, so occupier market and also investment market? Raymond, this first question is going to be for you. Just now, I very briefly mentioned the interest rate hikes, and for Europe, it was during the summer that the European Central Bank said, okay, 50 basis points, I think, and also this September, 75 basis points. What do you think that the impact will be of all that on the Dutch real estate market?
Well, we're good to take one step back first and to see what inflation is doing to the real estate market in general. I think that's maybe also an important question. And you see that inflation in general, the effect is quite broad. When you look at the user market and we look at the investment market. For example, when you look at the user market, you see that material costs are rising, and that causes problems for businesses, for example. You see that costs of products are rising in general. That causes problems for Dutch households. And these two developments together make it that the user market is becoming increasingly difficult for businesses because the economy is becoming more difficult because of the trends I just mentioned. So that first of all, because of these growing costs, indeed, the European Central Bank has announced to increase the interest rates in order to curb that inflation, so to counteract that inflation which is causing so many problems for all these households. And that in itself causes some problems as well, especially in the investment market, where it is becoming more difficult to finance new acquisitions because your costs of loans are rising. And that in itself causes problems for businesses as well, because they can also acquire, they're getting increasingly more difficulties to acquire loans. These are becoming more expensive, so that curbs the investments businesses are doing as well. So the increase in inflation is in itself also having an impact on the Dutch real estate market. So you see that the increase in costs and the increase in the interest rate is both having an effect on the Dutch real estate market, both for the occupier market as well as the investment market. So that's clearly what we're seeing in the Dutch market right now. Is it all that bad? No, not that much, because what we are seeing is that the Dutch market had strong fundamentals. When you look at the unemployment rate, when you look at the amount of businesses that's going bankrupt, all these kinds of indicators of the Dutch economy. Maybe another important one is the share of the financial reserves that businesses and households have at the moment is also quite high compared to maybe the last financial crisis. So I think these developments in itself are still positive. So all in all, we do see a negative movement for the Dutch real estate market, but these three indicators show that maybe we are better resistant to what's coming than what we have seen in the latest economic downturn.
So it sounds like there's a lot going on right now. And you also briefly mentioned the occupier market already.
Yeah.
Could you tell us a little bit more about that? I mean, the uncertainty is growing. What do you see, or what impact have you seen so far on the occupier market?
Well, when you look at the numbers, you see that there's still not that much impact. Take-up numbers show the amount of square meters that's being leased or purchased by users in the real estate market. And actually, in the first half of 2022 compared to the first half of 2021, almost in all sectors the take-up increased compared to the year before. So that shows that there was still a strong first half of 2022, even though these developments are going on at this moment. So we see that in the numbers there's still not that much impact, but of course real estate is always late cyclical. Businesses will experience problems in the future, more so than they are doing now, because they are still quite resilient due to the specifics I just mentioned. So not yet, but that will definitely, we will see that in the coming half year or the coming years.
Okay, so for now you could say the demand for commercial real estate held up quite well.
Yeah.
Turning to unique this time, if we look at the logistics sector in particular, are there any specific developments that you've seen so far?
When you look at logistics, we can see that once again we have record level numbers on take-up, and also the logistics market even reached its ever lowest vacancy rate percentage at this moment, 2.6%. And that has mainly to do with some structural developments. On the one hand, we see that there is very limited space for new developments due to the lack of land, lack of power, and of course increasing construction costs. And on the other hand, we see an increase in demand from, of course, e-commerce and also nearshoring, which brings more goods into the continent, and therefore much more space needed. And this is clearly shown in the occupancy rates in logistics right now, and also results in an increase of the rental levels.
Okay, so the vacancy rate in logistics hit another record low.
Definitely.
Turning back to Raymond, am I right to say that logistics for sure isn't the only sector where we've seen vacancy rates going down? No,
actually in all sectors vacancy rates dropped, so that's quite remarkable. Given all these developments we just mentioned. So that's still an indicator that the user market is still doing quite well. We saw that in office spaces, retail also surprisingly, where it was predicted that the vacancy rate would increase before COVID-19, but we're still seeing a decrease actually in vacancy rates in that area. Maybe also for offices, where you could say that there's less demand at the moment, but there's also quite a low percentage of vacancy rates, and it might even decrease because of the new regulation which is coming, that all office spaces have to have an energy label of C at the least in order to be leased, and that might cause some owners of office space to do something with that, to transform or to give their best to fill it up, that's causing a decrease in vacancy rates as well. So I think that gives hope at this moment.
So overall, it sounds like that the occupier market has remained very stable. Raymond, is that something that you expect to remain like that in the coming period?
Well, there will definitely become, troubles are increasing when you look at businesses, when you look at households. For example, everyone notices their increasing energy bill. Companies are noticing that as well. We are seeing that households have less to spend, definitely less to spend. And the same will go for businesses. They will have increasing difficulties to get loans because interest rates are going up. So expanding will become more difficult for businesses, also because their turnovers are very likely to decrease. So more towards the future, almost all aspects of the economy will see a downturn. Maybe some aspects of our economy more than others. I think on that side, definitely a strong effect of this, which we'll see in the future. But what we have seen in the last years, when you look at retail, for example, it gives hope that even though COVID-19 happened, that still vacancy rates decreased because there were so many transformations taking place. For offices, I think the demand and supply has been brought in better balance. And I think there is still an overwhelming demand for residential space at this moment. So I think the fundamentals from the demand side and the supply side as well have become quite strong. They are better balanced than we were used to. So even though this economic downturn is likely to happen, I think the structural factors which I mentioned will compensate a little bit for that economic downturn.
Okay, so we've talked about the occupier market quite a bit. If we move to the investment market, the occupier market, strong fundamentals still, but we do see that investors are getting more cautious. Is that something that you also see in the investment volumes?
Yeah, definitely. What we saw in the first half of 2022 is that the first quarter where the increase, the inflation was still not a huge issue like it is now, that there was still quite a big demand for real estate investments. Actually, in the first quarter of 2022, 4.7 billion was invested in the Dutch real estate market, which is quite high compared to the first quarter in the previous years. But when you look at the second quarter of 2022, we did see quite a strong decrease in the investment volumes compared to the second quarter of previous years. And I think Bas and Nick can confirm it as well, that there is less demand for real estate investments, quite some uncertainty among these investors, which we are definitely seeing in the investment volumes.
Okay, Bas, then, if you look at the different market segments that we have, is there any particular segment that you think has been more severely impacted?
Yeah, sure. Actually, two asset classes that have been hugely affected by these developments. So, offices and residential. Although residential is more in the field of my expertise, I would say offices were being caused by a lot of investors' hesitance as a result of the interest rates going up pre-summer. So this really caused a hard stop on a lot of deals that were currently happening, and they've either been paused or are being relaunched again after summer. Same with resi, but on top of the interest rates, I think the uncertainty that comes with the expected and envisaged affordable housing program plans by Mr. Hugo de Jonge, that is really causing a lot of uncertainty in the market for residential development, and as a result, we now see a more or less standstill in the market, where not many deals are taking place because of this uncertainty, as it is not set in stone yet how and when it will happen. So this has a huge impact on where we are. It's super. We have a lot of conversations with our clients on this topic. And it is not easy to digest because it's piling up a lot of elements other than just the macroeconomics causing this this problem.
Yeah, let's talk about that a little bit more, the
Yep.
residential market and the regulations, because I know that the stricter regulatory environment is something that, well, I think our clients are very much interested in.
Yeah.
Could you tell us a little bit more about that?
Well, the good news is we launched a report today with a lot of help from Raymond and the research team regarding the new ambitious regulations. It all comes down to the affordable housing program, but it also means a lot of work to be done in this field of expertise on the affordability and sustainability of residentials. Let's say, without going too deep into the details, I would say really do read the report because it's helpful and it can be found on the website as of today. But it comes down that additional hurdles might be taken into action where now we have already kind of a rigid point system to determine rents, and basically the hurdle is being raised from 1,000 to even 1,250 euros per month, and everything that's under that hurdle will be more or less regulated. This has a huge impact on what you can actually build in a market that is already super tight in terms of land availability, land costs, construction costs, and getting a permit is not easy too. So this is, like I mentioned, the pile up of a lot of things that are happening. But the result is our gut feeling that the total residential rental market will decrease as a result of this development, simply because it's not attractive anymore to invest in the Netherlands in this type of product for now.
Thank you, Bas, for this update on the residential market. If we go back to the investment market overall, Raymond, the slowdown that we see there, is it already leading to price corrections?
Well, in the Dutch real estate market, that's definitely taking place, of course, because the cost of borrowed capital has increased, makes it more expensive for investors to acquire new properties. So that's leading to price corrections. The degree of which, I think Nick and Bas also might be more up to date on the degree of which, but when we look at other countries, our colleagues from the UK, for example, and our German colleagues, they are already noticing price corrections in some deals. In German cities, for example, office investments pricing have increased with 30 base points, I believe, and in London with 15 base points over the last quarter. And I think that will only increase in the coming months, given the increase in interest rates which are coming up. So we're seeing that right now in many countries, but there are still not enough deals to determine the degree.
If we go to logistics then, Nick, what do you expect there?
Yeah, of course, due to the rising debt cost and construction cost, we think yields are going upwards. I think mainly first that will be the case in the core segment, and that has to do with the fact that the spread between the debt costs and the yields being paid in the core segment are really small and further decreasing. Luckily, in the Netherlands, we have some very strong fundamentals in the logistics market, like we just already mentioned, which results in a lot of rental growth. So therefore, this effect of the rising cost can be somewhat evened out, especially in the value add and core plus market, by this rental growth.
Okay, thank you, Nick. We are nearing the end of this webinar right now. I think our viewers would be very much interested to know what the outlook is for the coming months. Nick, Bas, Raymond, Any thoughts on that to share with our viewers?
Yeah, I think like I just like I told before, there are definitely increasing difficulties when you look at the occupier market, but that's more towards the future. There will come a moment that households are unable to pay their bills. That businesses are getting increasing difficulties because households are less able to or will spend less, and then eventually more businesses will get into trouble, will downsize. So these are the economic prospects, which will lead to less demand in the user market. But I think what gives hope is that the relation between supply and demand has bettered over the last years. A lot of superfluous office space, retail space, so name it, has been transformed to other functions. I think that will still happen, even though it's a little bit difficult to transform these days because of rising construction costs. So that is the question, if that's financially attractive to do that. I think for the residential market, different story, because there are quite some uncertainties on the regulative side. So
but in a way, it is an opportunity, right? So if you have the more regulatory stuff that is rent controls, it's also very easy forecasting for cash flows, and you know what you get. So in terms of investment and investment return, it's not the most, let's say, exciting product, but it's boring but stable, and sometimes this is exactly what investors need, especially in times of uncertainty. So I would say, in terms of outlook, it's either the flight to quality, to the real core product. We see this happening with prime offices. They're not that much affected by any economic downturn. Same with, let's say, the very good locations in residentials up until now. But I still believe that, let's say, there's still a strong demand for that one. Having said that, it will be more kind of the all equity buyers, Dutch pension funds, who will be probably more in play compared to a couple of years ago, where the big foreign groups of investors came in. And I think what we now see in terms of pipeline, there is a huge pipeline of products throughout all asset classes. And we have to find out whether that kind of 18 billion of real estate stock that is potentially on the market will find a new buyer. And that's something we need to find out for the second half of this year. But I think flight to quality, and another project, and I think you just referred to it, find that value add play to do either a rental gearing play, which is still an attractive 140 for the industrial side. We do see that sometimes with residentials too, but especially in the hotels and areas that have been not touched upon today, that could be of very much of interest to investors to find a niche to invest in. And that still is, I have to say that we're talking about inflation, that's a good inflation hedge, right? So real estate is here to stay for even in these high inflationary times.
Anything you'd like to add, Nick?
Like I said, in the logistics market, we see quite some chances still in the value add core plus segments. And on the core market, the thing is, the sellers and the buyers, they are not on the same page at the moment, but we expect them to come on the same page in a couple of months' time. So hopefully we will then see some more core deals coming as well.
Let me have a look at the chat to see if there are any questions coming in. Yeah, we do have a question. Let me see. Okay, it's not directed to anyone in particular, so whoever feels to share his thoughts, let me know. The first one is about the Expo, which is coming up, the Expo Fair in Munich for October. And the question is, what are you expecting the sentiment to be during the Expo?
I think everyone is really curious, and everyone is really looking for information, for new anchor points to start new transactions. So I think everyone will definitely is going to look for comparable evidence, opinions about where the market is going, and hopefully we can go from there.
Yeah, it's a lot about regrouping and let's say stay in touch with clients, which is the perfect opportunity for a venue like a fair. Because I expect to have a lot of talks with clients to hear from them. Let's say the overall sentiment right now is pretty hesitant. Everyone stepped on the brake, and everyone wants to know when is the dust settling and what will happen then. And Expo as a fair is a perfect moment to get in touch and to start off. I mean, this is all about the people and the decision making behind these real estate investments. So a crucial year, I would say.
I think I'm going to stay with you, Bas. Dutch hotel market.
Yep.
Any updates? Very broad.
Well, very broad. It has been a super paralyzed market, so tough to invest in because it was quite impossible to give an opinion on how hotels were performing, how the operators were performing during the medical crisis of COVID and the travel restriction we had. Now picking up, it has been an absolute recovery during summer. There's a lot of revenge travel or bleisure, as it's been referred to. Occupancy rates spiked, ADR spiked. It was insane, far beyond, let's say, the expectations of 2019, which was an all-time record year. Will that be a temporary spike? I'm afraid so, because of all the reasons Raymond explained to us today. Where households will need to spend their savings or their money on things that they wouldn't like to spend their money on, being paying the electricity bills. So that has a huge impact on the occupancy, we believe, for the next coming months. But again, it shows that the market is flexible and that it's ready to kind of bounce back positively. And what we now see is more activity than ever in the market. So. For now, I'm not that negative, and it's the perfect momentum to kind of reposition hotels. So definitely something to look into, and we have a lot of conversations going with value-add investors who would like to step in again in the market, and maybe some managed to core investors who brought their product to stabilized product to sell it off again, because again, long-term leases which offer a nice inflation hedge for the long run.
There's one more question coming in. Again, a very broad one. What's your advice on which sector to invest in the Dutch real estate market currently? Who would like to take this one?
Yeah, if you look at me, not surprisingly, of course, logistics. I think with the ongoing occupier demand, which is still there, and vacancy rates, that low. I think the fundamentals can be better as on this moment. So, and I think of course the occupier makes the market. So therefore, I would definitely say go into the logistics.
Yeah, I think it used to be beds and sheds. Now maybe a little more sheds than beds. But if you looking for beds, I would definitely go in the field of student housing, care homes, senior living, kind of the niche branded target groups. And especially student housing is a perfect example of very stable income with huge shortages, because we haven't spoken about the occupier market as for the residential market, but we still have a huge shortage in homes. And because of the rules now being laid out for us with the affordable housing program, it's not likely to happen that there will be a lot of new builds coming up for the next coming 1 or 2 years. So that shortage is not being served. It's almost impossible to find an apartment in Amsterdam below 2,000 euros a month, to give an example. So there are definitely opportunities, but it should be kind of Hugo-proof product, and that's where we can help out if you have any questions on that.
We have more questions coming up, but I'm going to take one last one because of the time. And this is a very interesting one, I think. What are your expectations for Prinsjesdag tomorrow? Not sure how to translate that to English. But tomorrow Prinsjesdag, what are the effects of that on the real estate market, you think? Yeah.
Give it a go, or
Yeah, why not? It of course, depends on what will be announced. But I think on Prinsjesdag there will be some more specifics about, I believe, about the Dutch residential market, the regulation which was announced earlier by Hugo de Jonge. I think that will have a huge impact, depending on where they will land the rent cap. So that will be very interesting to see for the residential market. Firstly,
yeah, I think the let's say the most important question we have as a society is, are they going to solve let's say a lot of problems where the society is facing today?
Yeah.
I think the answer to that question, if they have a question and a plan to kind of tackle all these issues we're currently dealing with, that will really help out the sentiments, or the lack of any answers to that question will further set the sentiment downwards. So it really comes down to what let's say the messaging is tomorrow, and that there will be, let's say, short-term solutions for the big issues we're facing today.
In view of the time, I think we'll have to wrap up, and I have a brief summary to do that. So first of all, what we see now is growing uncertainty, rising inflation, rising construction costs, rising interest rates, and sentiment which is becoming a little bit more negative. Because of all that, we expect to see price corrections in the real estate investment market. We do think that the Dutch occupier market has still strong fundamentals, and that still offers stable ground for our investors. In retail, for example, redevelopments continue to improve the supply-demand balance and also reduce vacancy rates. If you look at the office sector, we expect that high-quality buildings in prime locations will remain in demand. Residential and logistics market still very solid. So overall, the Dutch real estate market remains an attractive long-term investment. And especially if you compare it to the stock market that we just mentioned, also way more volatile. So we think that there's going to be enough capital flowing into the Dutch real estate market. And for this year, we expect a total investment volume of 18 billion euros, which is 1 billion euros less than last year. That wraps it up for today. Thank you again, Nick, Bas, and Raymond. And thank you, of course, also for viewing. If you have any questions, ideas, suggestions for the webinars that we've been organizing, please let us know. We are very happy to learn about them. And please join us again in December for our next webinar. Thank you.